77. C company entered into a contract on 1st January 2015 to construct a factory for seed company. Okay. Construct a factory for S company. The total contract price was 2.8 million. 2.8 million, which is expected to generate a profit for C company. Hmm. Okay. Contract price is this much, and there will be profit for uh, C company. Okay. C company has an enforceable right for payment. Okay, S company obtains control of the factory as the asset is constructed. So C company will prepare, construct this asset for S company, and S company will obtain control of the asset when it is constructed. C company has an enforceable right for payment in respect of the construction completed to date. C company has an enforceable right for payment. That's right. C company is constructing the asset for S company. So C company will have right for payment. The contract states that the performance obligations are measured according to certificates issued by the surveyor. All right. C company measures satisfaction of the performance obligations under the contract by reference to the value of work certified as complete at 31st December 15 at year end. The contract was certified by the surveyor as 35% complete. Then 800,000 has been invoiced to the customer, means invoice to S company. Assume we are C company, so we have invoiced to S company. How much? 800,000. Okay, I'll just increase this thing or change this. You know, yeah, so 800,000. Identify. So now the question is saying identify by selecting the correct option below whether a contract asset or contract liability will be recognized as at 31st 15 and what the carrying amount will be in the statement of financial position as that date. In whose books? I think it is asking in C books. You know. So we have all of this information. Let me bring it down closer to the question so that you can see. So for us, so assume we are like C company and they are asking in the books of C company whether it will be an asset or a liability. Okay. So there is a contract asset, I would say. Why say? Why so? We have billed for 800,000. Total contract price was 2.8 million. Okay. It was mm, 2.8 million. And they are saying that 35% of the work is complete. So it is mm, financial this. So we have completed the work for 980. We have invoiced for 800. So 180 is Contract asset for us. Okay, it is contract asset. All right. 78. A company prepares its financial statement to 31st October each year. All right. During the current year, America company secured and received a government grant totaling 720. Let me change this completely to make this financial and without any decimal places. All right. So they received a government grant of 720K to support the digital upskilling of its workforce. 120,000 of the grant relates to investment in new IT equipment. Investment in new IT equipment. Of the grant relates to investment in new IT equipment, and the remainder is to support training across a 2-year period from 1st April 15 to 31st March. What is this? So much of information. Like they received 720,000 of government grant, 120 investment in new IT equipment. It relates to 120K. Out of this, not an additional number. Out of 720, 120 is related to investment in new IT equipment. All right. And the remainder is to support training. Training for 2 years. 1st April 15 to March 17. The remaining amount 600,000 is for this thing. Okay. The grant was received on 30th June 15. So they received on which date? June 30, 2015. And okay. A company fully intends to comply with the conditions of the grant. It purchased the new IT equipment on 1st April 15. So this they purchased on 1st April 15. Okay. So they purchased the IT equipment on 1st April 15 and training started on April 15 after 2 months. I mean 3 months actually. In June they received this grant. Okay. And commence training with immediate effect. Okay. What amount should be included in non-current liabilities? Non-current liabilities. Liabilities. Okay. Non-current liabilities. What amount should be included in non-current liabilities of a company at the year end 31st October 15? On this date, how much will be shown as non-current liability? So by 31st October 15, what is completed, what is not? Hmm. So because they have bought this 120,000 of investment in IT, this thing, they bought this IT equipment. So this 120 can be, I mean, it has been used, so 120 can be immediately recognized. Okay. Then this 600,000 is for the training for 2 years. Hmm. So the period end is October 15. So how many months? Because the question is asking how much, because this 120 is gone. I mean, this 120 will not be in a liability. They have bought this equipment, received the grant, it is gone. Out of this 600,000, from April, May, June, July, August, September, October, there are 7 months. But they received the grant on June. Okay. So July, August, September, uh, So what will be the period is uh, they received on 30th June, but that is not relevant, when the grant was received is not relevant because the conditions are being met from 1st April 15 only because on that date training is started, and from that date like beginning 1st April 15 the grant can be recognized. Hmm, beginning 1st April 15. So April, May, June, July, August, September, October. So 7 months is already recognized. Okay. So the remaining period is how much? Remaining period is 24. Hmm. So what will be our non-current liability? Out of this 17, so the total they are going to recognize over 2 years, which is like over 24 months. Okay. Out of this 24 months, from April to October, 7 months, they have already recognized the revenue for remaining 17 months. Okay. Out of this remaining 17 months, I mean, I can put it like this. Um, Total period, I can say that for 24 months, this training is for 24 months. So revenue recognized for 7 months, recognized already 7 months. The remaining months, 17 months, or remaining period is 17 months. So out of which current will be 12 months, right? Because next 12 months we say that it is our uh, current liability 12 months, and non-current will be 5 months. Okay. And repeat it again. The total period of this thing training benefit will be, there for 12 to 24 months. The revenue can be recognized immediately beginning April to October, which is 7, April, May, June, July, August, September, October. So 7 months they have already recognized. Then the remaining months are 17, out of which next 12 months will be our current and then non-current will be 5. So once we know this month, 5 months, what we can do? We can take this 600,000, divide by 24, which is total period for this training, and then multiply by this 5 months, which will be non-current. So non-current liability will be 125. Okay. So basic thing here is to see, for what period we will do this thing and know that this 120,000 will be recognized immediately, this will go in the revenue, but this 125 will be non-current by the logic of these months. 79. On 1st October 2012, P company entered into a contract to construct a bridge. Okay. So P company is going to construct a bridge. The total contract price was 50 million. Okay. Contract price was 50 million. And construction is expected to be completed on 30th September 2014. This is what? Completion date. The contract is expected to generate a profit for P company. Okay. The customer obtains control of the bridge as construction takes place. Okay, as it is taking place, the customer will take the control of the bridge. Cost to date are materials, labor, and overheads is 12 million. Okay. Depreciation of plant and machinery is 3 million. I will put it in total numbers. Okay. So it's 12 million and this is 3 million. Depreciation 3 million, materials, labor, and overheads 12 million. Cost to date, they are telling us. Okay. The value of the work completed at 31st March 13. So this is, I think this data is by 31st March 13. So has agreed at 22 million. Oh, so the work completed worth how much? 22. Total contract price is 50 million. Work completed worth 22 million. Estimated cost to complete is 10 million. Estimated cost to complete is 10 million. The company recognizes satisfaction of performance obligation determined by the value of work completed to date. Huh. Hmm, hmm, hmm. So total cost I think is going to be 32 and contract price is 50 million. So what percentage of uh, the work is? Wait a second, not this. I mean, 10 million is estimated cost. 20 million is this thing. Wait a second. What I think is this is the estimated cost, and they already have incurred 15. So I should bring this here, I think. And so the cost they have incurred plus they are going to incur is 25 million. Okay, total cost. Out of which 15 million is already expensed. Hmm. So this contract revenue they have recognized is this 22 million. Okay, this is the contract revenue. Okay, cost to date is 15. So this is cost to date. We can say 10, 12, 30, 15. Okay, and estimated cost is 10. Total will be 10. But work completed with this cost incurred till date. This we can say like revenue recognized. 22 million because the value is this thing. Cost incurred till date is 12 plus 3, 15. So profit um, recognized on this date should be 22 minus 15. Okay. So our answer should be 7 million. Okay. It is simple, but just we need to pay some attention to it because it is given. We don't need to calculate any kind of proportion or anything. This 20, they are saying that the work has agreed at 22 million, so this will be the revenue. Okay, 22 million, and the expenses we have incurred is 15 million, so that we will deduct 7 million will be our answer. So we did this 77, 78, and 79.